Well, hello, folks. Top Gun here, and I got a good one for you tonight. I really do. I got a good one. So, did call this Pulse Radio. We'll start with the Pulse News, so that way you can ignore everything else I have to say. And don't forget to hit like and subscribe. Why not? So, we've got information that's come out from Richard Hart recently, which basically illustrates that we have two teams working in tandem. He has split up his devs, and he is working them on the original, the OK code, testing the crap out of the exploits that may be inherent in Ethereum. So they're testing, make sure it's secure, at the same time as the other team is rewriting it in the Go code, which is going to be the superior product. Now, which team finishes first? The auditing and exploit testing, or the newer, bigger, badder code? Well, if the newer, bigger, badder code wins, we don't even worry about the other code. We go with the newer, bigger, badder code, and we go. And if the other code wins, gets ready first, well, we release Pulse Chain the way it was going to be with version 2.5, 2.5. That testnet, none of the code rewritten in Go. So if that's ready first, that launches, and then when the superior product's ready, it can be launched. This is basically good news. So the problems they did find in Ethereum meant extra auditing, more tweaking, and more testing. This is a huge delay. So when's Pulse Chain coming? I don't know. No one knows. When Lambo? When Zamboni? I'm still waiting for Zamboni. Yeah, we don't know. But the merger with Ethereum, still just a joke. They are a long way off of lowering gas fees or taking care of any of the problems. They're just throwing more users on a bad network. Well, not a bad network. Ethereum's good. It's obsolete. Like Bitcoin, it does not move fast enough. 15 transactions per second is not enough. So, anyway, yeah, that is our great news as the window shifts. And there we go. So, although abound, we still have a whole bunch of panic in the market. If I haven't talked about it, the chip bill, the $52 billion not necessary, basically extortion from NVIDIA and Intel. We're going to build a giant chip making plant, but only if you spring for half of it. Kickbacks abound, and otherwise, oh well, that's what people do. Why does this matter to crypto? It does, folks, and I want to show you why. All right, tech, stocks, and Bitcoin are inherently linked. So, yeah, we got the pop higher because Nancy Pelosi tapped off her husband, like usual, and her husband placed a huge bet, the chip bill, and everyone's piling on. And now there are some issues with this. So we are trading into a summer rally, but if it comes too hard, too fast, we're going to hit a ceiling, and it's going to stall it out, cause some major pullbacks. What am I talking about? Well, Carnival Cruises, for example. Really crappy businesses that are not going to do well in a recession, that are hurting for cash as it is. Well, they're linked in ETFs, so as tide rises all boats. Well, as the money goes into Carnival Cruise, also retail investors going, oh, but it's dipped down because it's about to go bankrupt. It's a good deal. We hit a bottom. I should buy. It's just a rally. Dead cat bounce. It's market correction because it went down too hard too fast. We're going to go up for a bit, but then it's coming back down. The fundamentals are still not there. So all they're doing by doing this, Carnival Cruises immediately announced they're selling a whole bunch of stock onto the market because they're taking their investors' money that were dumb enough to pile in and going, oh, well, we can raise capital this way and stay afloat a little longer and then go bankrupt and nobody will get their investments back because that's what companies do. We love middlemen, right? You got to suck the middleman D. So, yeah, we've got a bit of a glass ceiling on this. So, too hard, too fast. That's kind of what we're dealing with. And the Fed meeting is next week. And if the rally goes too high, too fast, yeah, we hit the ceiling. And also, if the market recovers enough, it might actually give Jerome Powell enough ammo to go even harder at the Fed meeting because they know they need to go hard. But if this rally is just right, they may maintain dovish at 3/4, 75 basis points, 3/4%. In that case, that that's priced in. That's where the markets might actually be happy. So that's what we're aiming for next week. Earnings so far were not scary this week. Oop, wrong window. So here we go now. Let's have a look at the market and see what I'm talking about. Yes. So kicking right off, let's look at the SPX. All right. This is, or even the NASDAQ, highly volatile collection of tech stocks. Basically, it's tracking the major names that Apple say, being a part of it. Now, when we look at these, let's do it. Like, if you're looking at this, all right, I want you to see the pattern here. Let's look at the SPX. It goes up, it comes down. It goes up, it comes down, it flies off past the resistance after a big drop. Okay, so down, form an M, and shoot off for a really overly big W, Okay. And then let's look at the NASDAQ. Oh, big drop. One hump, two hump, shoot off past the resistance. And so why does this matter? Bitcoin, big drop, one hump, two hump, shoot up past the resistance. Oh, is it correlated? No, it can't be. Can't be. That's just a coincidence. Let's have a look at Ethereum. It's going to do something different. Oh, big crash, humpity humpity, off past the resistance. Oh, so correlation, these are moving together. The why isn't even that important. I'm not going to go into the huge explanation, Hart's Law, and all sorts of other stuff. I'm not going to go into the big math. I know you guys love that, but this is just basically the reading. Because I've been calling it out on Twitter. I'm starting to feel like Nostradamus. No, he got 2/3 of his predictions wrong. No, I'm doing better. So far, I've been calling things out. Now, the chart will speak to me. It'll tell me, oh, we're going this way, and we're going this way for sure, and I'll call it out firm. But the chart often tells me we're making a decision here. And so far, my TA is getting on point enough that I have not been wrong about any of my calls, although some of them are soft calls. They're like, well, we're about to hit the attention point. We're going to go up or down. Pay attention, but this is a key place, and there's lots of other things you can look at to track because I talk about them quite regularly. Also, another thing helping. Now, I have talked more than once about the trend is your friend until the end. So let's go ahead and actually zoom this out to the week. Let's do the day. I can just zoom the map down a little more. All right, the trend is your friend until the end. Now we're getting a good picture of about a year of oil. The trend is your friend until the end. We were in an upward trend. And then, boom! Basically, as soon as we fell down below, we came back up to test this. Was support, now resistance. We failed. We came back up to test the actual current downtrend of resistance. I don't think this line back here even matters. So right now, there's a small chance we could break free of this and come back and retest this yellow line of resistance. But I doubt it. Right now, we're in a good downtrend. Once this ball flag cracks, I have a funny feeling once oil starts falling, we're going to start to notice the recession. There may be some dumb money that trades even harder into the rally going, yay, oil's crashing. That means inflation's over. No, that means the recession's starting. But it is what it is. So right now, oil has barely been holding the 95 line as support. We've had a couple dips below. But if we lose this support, the recession is going. So what will happen towards the end of this bull flag? What will the trading throughout the next week show us? Stay tuned to find out whether we finally have the recession kicking off or not. So basically, we have a bit of a summer rally, hopefully. We've got a good month where things will seem okay between the Fed meetings. If everything goes all right, after next week, we won't have another Fed meeting till September. And we can have like up to 6 weeks for rebound if things don't go too crazy. It all depends on how much of that liquidity has been sucked out of the market. So I am always tracking what's going on in the SPX and the NASDAQ. Very similar. So this old line, not even relevant anymore. Delete. we can do the same thing over here. In there. Delete. Alright. So right now, what was our line of resistance, what we've now cracked, will be a line of support if we come barreling back down. But we do have these ranges to try and test for right now to see if we're going to make it up. Basically, 4050 is alright. If we go all the way to 4300, though, if we crack over 4100 even, that may already be too much of a rally where companies are going to be pulling out even more, hopefully keeping it down kind of, where people are just wasting their money. But if it goes too high, too fast, we'll have some problems. The Fed will probably, and Mr. Powell come playing whack-a-mole and raise those rates even harder. Now here, I've talked before, this is amazing. Apple has taken the even higher road, and it's making even higher highs. We're probably going to crack off of 157 and pull back. This rally has been a little too heavy for too long. We're highly overbought in the RSI for a week. We've come back up above the moving average. So a pullback would be healthy, just like we had here and here. And a pullback in Apple means a pullback in Bitcoin and in Ethereum likely. But that's okay, folks. Because when I'm talking a pullback from 157, I'm not talking any lower than 150, where we've just cracked above, like where we are. So we're playing in here, and this is where I feel really bad, because Michael Burr was watching this, and then, the fundamentals of the market, Palladium, Russia, all this other stuff, not looking good, and Michael Burr shorted. Now, on all his fundamentals is great, but timing the market is better than timing the market. But when you can see clear trends, you've got this big yellow line trend, and you're riding it hard on the bottom, eventually you're going to snap back up towards the top side before you come back down. And that's what we had, and he went ahead and shorted it, and then we had a mini rally, and I made fun of him a little bit early again. Then we crashed lower, and I'm like, all right, no, sir, this is a hard riding down. Maybe you did some good timing on this. Ouch, poor Michael Burr. He will be right in the end about this call, but timing is important. I mean, timing the market is better than timing the market. This is true, but it is still can matter to time things a little bit. Like, all right, all the fundamentals say this, but is today a good option or next week a better option? Sometimes it's worth a small little peek. Basically, knowing all the fundamentals, would have waited for the summer rally to bring pipes up to as high they were going to get and then short to maximize my gains. So it is what it is. Tesla, oh my god, no, it even cracked above that. Wow. It is still, have you not Google Tesla? Google recalls, Google breaking issues, Google this, Google that. Elon, since the Twitter deal went wrong, is getting it sideways every lift way. Twitter is not worth the money that it's going to be, and the judge is expediting. There we go, I can speak English. Expediting the court case because they're trying to sue him into going through with the deal and buying Twitter anyway. You offered us some money, we want the $44 billion. So the judge is also known as a hard ass. She's come down before ruling on the side, like, no shenanigans. You said you're gonna buy it, you buy it. So she's not likely to rule in Musk's favor. Things are not looking up. So everything, and the overvaluation, this is just the Calties, the Tina argument, buy more, it's coming back down, folks. But it is what it is. We've had a good rally so far. So yes. Now that I've looked at all of that and talked about all that into the crypto, because it is connected, zoom back in here, and I've been keeping a little closer watch actually on the 4 hour. It's been showing me a better idea of where everything's at. So we're looking at Ethereum right now, the current uptrend. So we fell down under the overextended trend, which is okay. This is probably going to act as a line of resistance now, continuing forward. So we probably won't shoot back up over this line, but we can still travel in this channel as it's heading up, which means we'll have pullbacks and links, but this is still the bullish trend. The trend is your friend until the end. Right now, the reason I'm bullish on this is the MACD shows lower and lower light red impressions, meaning it's about to turn green. We're heading towards another crossover. The RSI has been oversold for over 24 hours in the 4-hour conditions and is starting to rebound. Chances of this just foddering out very low, so we're likely to continue to head back up, which is why I made a tweet about 1700 being our next likely test spot, and not necessarily overnight. So overnight we could see a little bit of a pullback, fodder, it's all right, but through tomorrow sometime we're going to go to test this, and I wouldn't be surprised if we crack over and hold it as support, holding that rally up, because Bitcoin is traveling in tandem with it. Now, this was the over accelerated. We can get rid of that one. Lost it. Bye. So right now, this yellow so it stands out better. These are our current lines. I could zoom out, but it's the same as the SPX and everything else. Our current downtrends. We broke out, and now we are forming 1, 2, 3, 4, 5, 6, 7 higher lows. And as we continue this, the trend is your friend until the end. So Bitcoin, now this is where Bitcoin might take over the lead again against Ethereum, and whether or not it double topped already. Did it go too hard too fast? As you can see, it had to have a pullback. Look at Ethereum. Ethereum had its pullback, but it's already back off to the races. Yeah, it is what it is. So as you can see, the ROIs are not the exact same in these assets, but they are moving up together and they are moving down together. Funny enough, Hex is being dragged around the same way. Reason being, the volume is still low in Hex. As you can see, it was higher as we bottomed out, but it's dropped back off. And even though the liquidity pool is so small, Hart's Law still will always affect the price, just not as much. So the ROI might not be the same, but it goes up when it goes up, goes down when it goes down. So Hex, without extra volume trading in and buying, without that there, which this is some pretty bullish activity, is still going to get dragged around by Ethereum. But it is small enough users, our number of users, like, hey, if the buying keeps showing up and the volume starts picking up in Hex, it can trade and break its correlation with Ethereum. It's done so earlier, like Ethereum kept crashing when Hex screamed a bottom, which was awesome. Awesome. So Hex, yeah, we're trading, here's the bottom, the red line. Trading significantly, well, not significantly, that's a full penny. That huge gaping line between the blue and the red. That's a penny. But that penny, that's worth 25%, out of 4 cents. 1 penny is 1/4 of 4 cents. Like, wow, that's a huge amount of gain to really crack on in a bear market. Hex just found a bottom and decided it's going up. So we've actually got some good market conditions and some good news. So yeah, rally abounds. I do warn, this will run out of steam. There will be something that'll spook it. Traders beware. Opening longs at this point or buying the assets, you better be prepared to pay the fees to swap back out in a hurry. You may have already missed a significant amount of the gains. Depends on what we have left to amp out before the Fed meeting. It depends on next week. Like the technicals are great. Right now, the news is starting. The market's trading on any amount of optimism. But strange things happen. This can turn south very, very fast. You are gambling that no bad news will happen, that Putin won't just have a bad mood slip of the finger, fat-fingered nuke launch, like was being threatened and everyone got scared that the world was ending. What was it, a week ago? Luckily, I was too busy working. I didn't know about it till everyone was already calmed down. I might not have slept so well. So, yeah, there is always a lot going on in the markets. Now, also on the note of Pulse News, I'm happy about the Pulse Native Wallet, not RH's, but IM's. They've renamed their token for the wallet to WD, wallet dividend, WD. And so their tokens are IM and WD. A little easier to understand. WD represents the wallet. IM is their internet money. Now, funny enough, the wallet, that token, that pays dividends based on what the wallet fees collect. Some of those dividends will be used to buy up IM and burn it. So 2 tokens making a buy and burn system. The WD being pretty immutable and pretty awesome. Like, I like the way that they're setting this all up, and beautifully enough, like, I hope I can get KG on again. You can search on the internet. He's popping up all over YouTube because they're getting closer and closer. They've mocked up the plan for the wallet. They're working on the beta, and after the beta release and some testing, there's going to be another round of sacrifice. The reason they're doing the collection and investing, or the chance to buy in, is because in order to pay dividends from the transactions collected from each chain, even though it's Pulse Chain native, like MetaMask, it'll work on multiple chains. If you're going to collect fees and pay dividends on those chains, you need to have a token native to that chain. So that means they have to do this process over and over again. Now, the one sacrifice could just be done for all the chains, but, they're not greedy. They were very, very polite about the amount they raised for the first sacrifice. They capped it so that you couldn't go too excessive, and likely they're going to cap the other ones too, because they're not going for stupid amounts of money. They're just giving people a chance to get in if they want. And really, the beautiful thing with this ecosystem is the IM. I love the IM because the IM is currently for sale on Binance. You got to go play on ScamChain. I know, it's a little scary, but it's such a healthy, sexy chart. It had a fat finger the day it launched. We're going to ignore that. The launch price was supposed to be down here. There was a fat finger accident, and it was fixed, and it was launched. All right? Shit happens. So there's the launch price. It has done very well since the launch price. Look at that. It literally 10x'd to there. And then, oh my god, yeah, it 10x to there. We had 100x from the launch. And oh my god, we almost got to 1,000x. Like, that was some pretty serious trading. There are only 800 users on this lovely, lovely coin. And it is trading pretty healthy around for its next run-up. Actually, 800 is not correct. Let me give you the actual number. Oops, not copy. Load it. 878. Ooh, the users keep slowly rising because the buying action and volume. It's slow because there aren't that many users, but it's steady. So even when BNB is dropping, this continues to stay above it. BNB drags it around because you have to price in the native chain, the majority of it. It's one of the negative things of this chain. It does drag the price around quite a bit, but the limited number of users have been able to maintain this price and keep it trading above, like, much healthier than the BNB chart. Nice, steady, sexy trades, good amount of volume. I'm liking it, and as we're coming up finally to crossover, try and break this line of resistance and head off. Yeah. The reason that I'm bullish on it is it's going to get bought and burnt. So buying it now on this huge discount, well, who's going to buy it? The wallet is. Every transaction made on that wallet, a fraction of it is going to buy this stuff up and then burn it so it can never be sold on your head again. That means price go up like PulseX. That means this is an early, sexy investment. Yes, I bought a bunch. I would probably love to shill it so I can make some money, but I don't need to. I could sit here and quietly buy up more without telling you about it. I've thought about it. Like I said, I'll never lie to you. Doesn't mean that I'm always going to put you first. I got to make money. I'm poor here. But I share this golden little secret that only 800 people are participating in, that's going to be hammered and bought over and over again with every transaction made on this wallet. That's going to be better than MetaMask because, it's going to show you your balances. And it's, I'm not going to go into it. I'm going to have KG on again if he'll be brave enough. after the roast I put him on the first time. Welcome to the Scammer KG. So yeah, I will bring him on to talk about this wallet again. I will schedule an interview at some point because there have been so many changes, so much good news, so many updates. Obviously, running away to Bermuda with all of our money, he's doing it wrong because he paid for devs and got a CTO and he's working on the company. So things are finally progressing, and I have some news about Pulse and some optimism as a summer market rally is happening, and pretty much has been happening since I called it. Like, I'm happy here. I just was nervous, and I'm like, where's it gonna fall out? Where's it gonna fall out? Like, I called the bottom, and then I've been calling the chances. Like, since the bottom, I haven't seen anything in the chart that's gone for sure until we started cracking over the major lines of resistance. Now, funny thing with Hex, there we go. We went up a little too high, too fast, and made another current down slope. Like, we had cracked. Like, there wasn't the same trending down slopes. We can get rid of this noise. Let's get rid of that. Let's get rid of that. Alright, so pretty much it's free-formed right now. If we look at Hex, traveling very, very free-form. Because that up there is the major line of resistance. Hex fell out fast and hard, kind of. And, yeah, we've got some going. Like, we hit a bear market first, so we had a rally starting, which pushed this line up higher because we cracked through the original one. Oh, that might have been something I should have done. That might have told me a thing or two. Just thunk a thought. Right here. That would be where... Oh, no, that's not even the one I want to track. What am I doing here? Gotta zoom in. It's some more. There's like, what are you doing? Just get to the point. Let's help if I go to the daily. Ooh, really zoomed out. Alright. So, what I was talking about was this. Finding out where this line came to in our realm of doom. Alright. Because that was our original downslope resistance, the one where everyone's just got over. We were cracking it, which is why we came down so hard. We bear marketed first, we were rallying first, and then things went really sideways. So let's zoom in and see if this has any correlation. So this was the original overstand, and okay, now we look at Ethereum, and they're over the big long term. Okay, alright, so if we hadn't had that rally and maintained, we just cracked over it. So this is the buy me signal. Now, if you like to look at the 4 hour, ooh, yeah, she's falling around with ETH. We're finally trading above the moving average. Things are looking just as sexy and good in Hex that we should be hitting 6 cents. Barring any major disruptions, we should be hitting 6 cents sometime in the next couple weeks. I'm excited. I'll be keeping my eyes on it, keeping my eyes on the news from the Fed. And so, in the meantime, thanks for tuning in, folks. Hope you enjoyed my long rant, my little dose of optimism. Until next time, stay frosty.